Welcome back to the deep dive. Last week, we really got into the market for the week ending May 10th. It was, well, quite a picture.
It really was. We saw that average price nudge up, what was it, 2.5%?
Yeah, about that. But, that average hit a lot. Volatility was seriously high, over 41%.
Right, and the average price was sitting around the $616 JMD per kilo. Sentiment felt pretty neutral, cautious maybe.
Exactly. And we saw some big winners.
Local onions shot up, imported cauliflower too, local ginger.
Those were big jumps.
Over 50% for onions, nearly 50% for cauliflower, ginger over 40%, green sweet peppers, greenhouse yellows, they were up too.
But then you had the decliners. Local string beans took a tumble.
Yeah, string beans, sugarloaf, pineapple, local red sweet peppers dropped quite a bit. Imported onions, white yam too.
That Scotch Bonnet pepper is always the interesting one.
Absolutely. Huge volatility. I think it was over 70%, even though the price itself only went up a little, like 4%.
Wild swings.
Yeah.
And regionally, St. Anne and St. Catherine saw massive average movements, right?
Huge. St. Anne, over 160 JMD average movement. St. Catherine, nearly 130. St. Thomas, though, was down on average.
Okay, so thinking back, the strategies we touched on involved smart storage, maybe procurement for those gainers like onions and ginger.
Right, and looking at arbitrage between regions, but also highlighting the risks.
Definitely. That high volatility plus hurricane season approaching. We talked about hedging, maybe cutting exposure to those falling commodities, diversifying.
Which brings us nicely to this week. We're picking up right where we left off, looking at the week ending May 16th.
So what's the latest chapter in the story?
Well, on the surface, the market looks pretty stable. The average price increase was tiny, just 0.7%.
Okay, sounds calm.
But, and this is the key thing, that volatility we mentioned, it actually went up slightly, now sitting at 43.5%.
But so still very turbulent underneath that calm average.
Precisely. That underlying churn is definitely still a major factor.
And the big risk we flagged last time, hurricane season, global input costs, imported food inflation, they haven't gone away, have they?
Not at all. Still very much on the radar. But there might be a bit of a positive counter pressure.
Oh.
Seeing maybe some stronger demand linked to tourism picking up and potentially some government support measures filtering through could create opportunities, especially, for higher value crops.
Interesting. Okay, so let's dive into the specifics for May 16th. What really jumped out at you in terms of price drops?
Well, the big one has to be green gungo peas. A really significant drop. We're talking over 41% down.
41%. Wow. Where did that leave the price?
Around $200 and $612 JMD per kilo. The report calls it a major price correction. That kind of language usually points to one thing.
Oversupply.
Very likely. Seems like maybe the market got flooded a bit there.
So an oversupply of gungo. What does that mean for different players? Processors, maybe?
Yeah, processors could be looking at a good opportunity here. Cheaper raw materials, potentially. Exporters, too, if they can find markets for it at this lower price point.
But for the farmers?
For the farmers, yeah. If they were expecting those higher prices, this kind of drop can be really tough. Really highlights that supply-demand balance.
It certainly does. What else was heading downwards?
We saw greenhouse red sweet peppers take a hit, down nearly 30% to about 591 JMD per kilo.
Okay.
And interestingly, the data points specifically to Kingston for that decline.
Ah, so not necessarily everywhere.
Exactly. Suggests some price segmentation. What's happening in one place isn't happening in another, even for, greenhouse reds.
Right.
Then you have green sweet peppers. They were down too, over 16%, around 358 JMD. And that seemed more widespread across multiple regions, plus high volatility with it.
Okay, so greenhouse reds down mainly in Kingston. Green sweet peppers down more broadly. Underscores how local things can get.
It really does. You need that granular view. Also saw watermelon drop about 13.3%, likely just seasonal, demand cooling off after Easter.
Makes sense.
And even imported cantaloupe dipped a bit, over 11% down, maybe a slight softening in demand for imported produce right now.
Okay, so quite a few things easing off. Let's flip it around. Where did we see prices climbing? What were the top performers?
Well, this is where it gets really interesting, especially with the sweet peppers. While greenhouse reds were down in Kingston, local red sweet peppers surged, up over 36%.
Get out. 36% up.
Yep. To nearly 1,388 JMD per kilo. And the report specifically says this was driven by strong demand in Kingston.
So in the same city, greenhouse reds are down nearly 30%. Local reds are up over 36%.
Exactly. It's a perfect example of that market segmentation we were just talking about.
Yeah.
Different product types, maybe different supply chains, different demands, all playing out in one location.
That's fascinating. Really shows you need to know exactly what you're dealing with. What else was strong?
Local romaine lettuce, it kept climbing. Another almost 17% increase, hitting around 756 JMD.
It seems consistent.
It does. The report even suggests it could be an area for greenhouse investment. Maybe outdoor production isn't quite keeping up with demand.
Interesting point.
Then, white yam, or Lucea Yam, a really strong rebound, up over 16% to about 851 JMD.
Hang on, wasn't that one of the big decliners the week before?
It was, you remembered. Down over 12% the previous week, now up over 16%.
Wow, talk about volatility.
Exactly. Shows how fast things can shift. Report puts it down to strong local and export interest picking back up.
So potential for quick turnarounds, maybe short-term plays there if you're nimble.
Could be. Also, turmeric saw a notable rise, over 16% up generally to 369 JMD. But get this, in St. James, it apparently jumped 100%.
Doubled in price, just in St. James.
Seems so. Could be, that growing interest in health foods really taking hold there, or maybe a localized supply issue.
Worth watching. Anything else?
Imported broccoli. Despite being pricey, it saw a demand boost, up over 15%, nearing $2,240 JMD per kilo.
So even at that price point people are buying suggests maybe local supply isn't meeting that specific demand, or there's a preference for imported.
Could be either or both. Definitely indicates a market segment willing to pay a premium.
Okay, so pulling back again, looking at the whole market picture with these ups and downs. What's the overall vibe? Sentiment? Supply?
Sentiment still feels pretty neutral overall, and supply conditions are generally described as balanced. But yeah, that balance isn't uniform everywhere. You've got pockets of oversupply, pockets of high demand, and the big headline is still that high volatility. It's ticked up, remember. So caution is definitely the word.
Okay, let's crystallize those key takeaways for the week ending May 16th. Number one has to be the sweet pepper situation, right?
Absolutely. Red sweet peppers, local up massively in Kingston, greenhouse down significantly also in Kingston, and potentially down in places like Clarendon too. That really shouts market segmentation. Big challenge for planning.
Big challenge, big complexity. Okay, what else?
White yam and lettuce, they look like they've got some sustained strength.
Right, the yam rebound and the steady lettuce climb.
Yeah. So for you listening, if you're looking for potential opportunities, those two seem worth a closer look. Maybe potential for increased production.
Okay. And the Gungo peas drop.
That big 41% fall, like we said, potential upside for processors, exporters maybe, if they can capitalize on that lower price.
Turns a negative for farmers into a potential positive elsewhere in the chain.
Exactly. And we should just quickly mention again, string beans, Scotch Bonnet, West Indian red peppers, still showing extremely high volatility, over 70%. So big potential swings there. Continue.
Got it. Now, let's zoom in on those regions again. What did the parish level data show this week? Any standouts?
Yeah, definitely. Kingston and St. Andrew still showing that above average price per kilo, saw a positive price movement overall, about 3.28% up, but very high volatility, over 66%.
Matches that sweet pepper story.
It does. Then St. Catherine. Really high average price movement, over 105 JMD up on average per item tracked there. And volatility. Through the roof, 146%.
Wow, okay. Extremely volatile. What about somewhere like St. Elizabeth?
St. Elizabeth was more stable. Lower average price, around $325 JMD. Actually saw a slight decrease overall, minus 4.4%. And volatility was low, about 23%. Supply seemed moderate there.
Interesting contrast. Manchester.
Also low average price, 322 JMD. Small increase, about 1.3%. Moderate volatility, around 50%. Fair supply.
And St. James, where the turmeric apparently doubled.
Right. St. James had a very low average price overall, 273 JMD. Moderate price increase, 5.7% up. Low volatility, similar to St. Elizabeth, around 23%. Also, fair supply reported.
And you can really see, like you said, with Kingston, how the specific commodity movements feed into these regional numbers.
Exactly. The Kingston red pepper surge likely boosts the whole KSA average. That extreme volatility in St. Catherine probably reflects massive swings in a few key crops grown or sold there. It adds that crucial layer of context.
Okay, let's talk risks again. Looking ahead now, what are the main things to watch out for?
Well, number one remains the hurricane season. Always a potential disruptor for agriculture here. That's just a reality.
Can't ignore it.
Then there's the risk from these mixed signals we're seeing, especially in things like sweet peppers. If local is up and greenhouse is down in the same area, how do you plan effectively? easy to make missteps.
Forecasting must be a nightmare.
Challenging, definitely. And that persistent threat of global input cost inflation, fertilizer, feed, fuel, that pressure isn't going away anytime soon and could squeeze margins.
Right. So manage the weather risk, navigate the confusing price signals, and brace for input costs. Okay, on the opportunity side, where's the potential upside?
Well, that sweet pepper divergence is an opportunity if you can manage the logistics. Arbitrage, basically. Buying lower where prices are down, like maybe greenhouse in Clarendon if that holds. Selling higher where local is up, like Kingston.
If you can connect those dots.
If you can connect those dots. Yam and lettuce, we keep coming back to them. They look like, relatively solid bets right now. Maybe worth considering expanding production there.
Consistent performers lately.
The Gungo peas dip, again, opportunity for processors. Lower input costs could be significant. And things like turmeric surging in St. James or the demand for imported broccoli despite the cost, they hint at consumer interest in niche areas or higher value stuff. Maybe potential to explore those kinds of crops more.
Okay, so wrapping up this week, the overall picture is, mild growth on average, but don't let that fool you.
Exactly. Lots of volatility bubbling under the surface, and these really significant differences between regions and even between, say, local versus greenhouse versions of the same crop.
We've pinpointed some specific opportunities. Arbitrage, focusing on yam and lettuce. Processors may be benefiting from Gungo, but the risks around weather, planning, and costs are very real.
That sums it up well. It's a market that really demands you pay close attention and stay flexible.
So here's something to think about. For you, the listener, as you digest all this, given these really starkly different price movements for local red sweet peppers versus greenhouse red sweet peppers, what kind of innovative strategies could producers actually use to navigate that kind of market segmentation and the volatility that comes with it over the longer term?
Yeah, how do you manage that effectively?
Think about how regional demand plays into it, how different growing methods affect things, and how using detailed market info could give you an edge. Lots to consider there. Thanks for taking another deep dive with us this week.
We'll catch you next time.